Hi everyone, the journey and education towards financial sovereignty and financial freedom are ones that everyone needs to go on themselves at their own pace and in their own way. And in this video, I'm pleased to be able to welcome on the channel for the first time Boef to discuss exactly that. And Boef is the founder of a crypto education business who's been in the space for years now and for whom financial freedom and financial sovereignty are paramount. And this is part one of two. So please do keep an eye out for the second video, and please do like the video and subscribe to the channel so I can continue to offer more content for you in future. Stick around to the end of this video to find out what services Coin Knowledge offers. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. So hi Boef, it's lovely to have you on the channel. Thank you so much for being here. It's your first time obviously speaking to the viewers and jumping on. So I just want to say thank you so much. To begin with, before we jump into it, we're obviously going to talk about financial sovereignty. Perhaps you just want to talk a bit about yourself and introduce yourself to the viewers, maybe a bit about your crypto journey or yourself, or obviously crypto vagabonds who are your business and who you represent.
Okay, so first of all, I want to thank you for the invitation. It's a pleasure to be here. To me, it's quite amazing because I think we started our journey at, 3 or 4 years ago.
4 years.
Yeah, 4 years ago, and to see you here now, like having your channel and conducting a successful business, that to me is really impressive. So thank you for the invitation, and thank you for allowing me to be part of this process of your growth into the crypto space. So my name is Boef. I have been previously on the traditional market. I have no schooling. I didn't go to school. I learned about money and economics literally by being a bum on the streets. I was in terms of poverty, I was literally a street bum. But I used to go to the library and study and research about money. And then that's how I got into the traditional market and started to invest. And then eventually I got kicked out of the banking system in 2014, around November, December 2014. And then 2015, I got introduced to Bitcoin for the second time. My first introduction to Bitcoin, I think Bitcoin was literally worth less than $1. I didn't think it was serious. At the time, I had already made my first million, and someone said, listen, Boef, just put $1,000 into this. And I was like, man, this is just video game money, and I'm not going to do it. And it's amazing. Like I was like over $1 million, and I didn't put $1,000 into something that was worth pennies. And today, of course, I regret that. But I think everyone gets into Bitcoin at the price that they deserve. 2015, I got introduced into BTC, and then I was already kicked out of the banking system. So I entered the crypto space without having any bank account, and then BTC allowed me to be able to transact and be able to participate on the financial world. So that's how was my introduction like into Bitcoin. And luckily, I was only BTC for 2 years. Not because I was a Bitcoin maximalist. I only heard the term maximalist after 2020, but I was just obsessed studying BTC. And then 2017 was the big boom of IPOs. I think I invested in another 18, 20 different projects. And ever since I have been like in less than 10 projects right now, but I have always been a huge fan of cryptocurrencies since I got introduced to it because it allowed me to transact freely. That was one of the reasons why I really became fascinated by Bitcoin and a few other projects.
Yeah, and that's what we're going to talk about today, isn't it? Essentially, financial sovereignty, financial freedom. So it ties in perfectly. Do you want to talk a bit about crypto vagabonds?
So crypto vagabonds was a business that emerged by me having Wednesday's tea with friends. Because this is what happened when I started to study BTC. I was this big militant for BTC. I was worse than any Jehovah's Witness that you could ever find. I would meet someone, and 5 minutes later, I would be like talking about Bitcoin. And that didn't work really well because a lot of people started to have this aversion to talking to me. And then around 2017, 2018, I started to have meetings with friends on Wednesdays and have what we call the Bitcoin tea or the crypto tea time. So we'd have Wednesday afternoon meetings talking about BTC. At that time, I was also working on the film industry. I was on art department. Then what happened was 2020, you all know, COVID happened. All the contracts I had lined up for the year, I had like in February, I had a lot of contracts already, deals for movies for the year. I got all the contracts on a Tuesday. on a Thursday, all the contracts were canceled because of the COVID lockdown. And I was like, I need to do something. And we started to brainstorm. I was having already this Wednesday afternoon coffees. And then the idea came up of making that an online event. So I did an online seminar on YouTube. I think I had like 30 people attended. Then it slowly became into a business. I found out a school, an academy that introduced me how to open a business online. And then that's how this whole thing got started.
How can people find you? So what's your online presence? How can people find Crypto Vagabonds or what you offer?
So today, I think the most prevalent platforms are Instagram and YouTube, but we also have a presence on Facebook. So pretty much Crypto Vagabonds on X, Crypto Vagabonds on YouTube, Crypto Vagabonds on Instagram. In any platform, we have the name Crypto Vagabonds, and you're most likely to find me. I recommend people to have certainty that they're talking to me come to the channel, because there are people that create similar names to Crypto Vagabonds on Instagram, and then they con people. So if you come to our YouTube channel, Crypto Vagabonds, normally below the video, we have the links where you can contact us. But we are across all platforms, X, Instagram. We also are on Clubhouse Tuesday to Friday, 2 hours answering questions and talking about cryptocurrencies and geopolitics.
Yeah, and I know you've got a great academy on your website, Crypto Vagabonds. So if anybody's interested in checking Boef out a bit further, Crypto Vagabonds, go to the YouTube, visit their website. I'll include a link below and check out the academy.
Yes. So there are two versions for the academy. There's one where you pay just to have access to the content, and there's a version live. So there's a difference in price, but to be part of the live academy, only by talking to me, because I like to literally make sure that the people that come in are people that I can trust, are people who are not going to sell the scams to the participants on the academy. So there's a much stronger barrier of entry to the academy live, but the academy content where you can just like subscribe and have a platform where you see all the recordings, all the courses, all the PDFs. That is free for everyone.
Yeah, perfect. Let's jump in then. In terms of sovereignty or financial sovereignty, what is it? What are we talking about today?
Well, we need to first understand where we are on the financial system, right? We need to understand that since the creation of central banks, or say since the beginning of the last century, there has been this enormous success for the governments to really intervene and control ourselves financially. And then in the 50s, we have the credit cards. So today, nobody really have financial sovereignty. There's a difference between financial sovereignty and financial freedom, right? Financial freedom, people measure by you having a certain amount of money where you're free to move and you have very little restrictions on your life. That's one thing. Financial sovereignty to me is when you are capable to transact and no one can stop, block, revert your transaction, or you don't have to be on a 30-minute call with your bank in order to have a transaction to go through. And to me, that is financial sovereignty, is when I am free to transact privately with anyone I want, anytime I want, and no governments or group of governments or authority can stop me from transacting or purchasing or interacting with someone else in terms of trading. So that to me is financial sovereignty. Does it make sense?
Yeah, definitely. I think sovereignty is all about power and authority, isn't it? So it's about the control of your finances. And as you say, as you kind of allude to, it's not, most individuals don't have financial sovereignty. They don't have the power or the authority over their money. Should we go a bit further in that in terms of having complete control over your wealth? So being like free from third party interference, or are we talking about like governments and government overreach and central banks and inflation? And I think there's quite a bit to unpick.
Yeah, so let's talk about, how, for instance, examples of financial control. And most people may not see in that manner, right? So for instance, let's look at Canada with the truck protesters, right? There was a legit legal protest going on in Canada by the truck drivers. There were legally legit donations done to that movement. And then months later, Trudeau decided to make all of those actions legal. And I have a lot of clients from Canada who came to me after the situation happened with the truck drivers, where they had their bank accounts frozen, Trudeau ordered confiscation of some funds or freezing funds, and they saw themselves without the possibility to transact, right? Same thing happened in the US. The US, for instance, they legalized marijuana business, but there's an order from the government to cut any marijuana business from the banking system. And that's how they pretty much choke down all the business. It's actually called an operation, I think Operation Choke Down 1.0, which was on the marijuana business. And then you had the Operation Choke Down 2.0, which is cutting the banking system from any crypto, from the crypto industry. So, and we also have here in the UK, I think Nigel Farage got himself like disconnected from the banking system. So people don't realize how they don't have sovereignty or a saying on who they transact with. Now, let me make sure people understand this. The freedom to transact is the foundation for every other freedom, right? So I'm going to have an example to you. Freedom of assembly. Okay, you have the freedom of assembly, but if you can't transact, if you can't buy a bus ticket or a train ticket or an airplane ticket to get to the place where you're going to be able to speak or associate with someone else or have a meeting, that freedom is not there. So once, and the governments have this all figured out, once they removed from us the freedom of transaction, there's no freedom of speech, there's no freedom of assembly, there's no freedom that you can exercise because you can't transact. You can't buy things and you cannot pay for things. And most places today, like you cannot pay without a credit card. Cash is becoming kind of illegal in a way. A lot of places here, for instance, in Europe, you go try to pay with cash. They say, no, we only take a PIN. But if you are taken out of the banking system, then you cannot transact. So that to me is where crypto becomes really appealing because no one can stop you from transacting. You have total, absolute freedom to transact with any party you want.
Yeah, I think there was something in the UK recently. I think it was Barclays. I can't quite remember the bank, but they're limiting cash deposits and withdrawals to banks. So that's an exact. It's that financial sovereignty in terms of this is your capital, but then we will dictate what you can essentially do with it in terms of withdrawing and depositing.
Yeah, I had that happen in Brazil, and I think the same thing happened in Cyprus. And again, a lot of people in Europe or the first world, they believe, oh, this thing happens in South America, this happens in Africa, Middle East, it will not happen in Europe. But I remember I was traveling in Europe. I already had exposure to BTC. I was only BTC, but my partner at the time, she had banking accounts in Germany, and we were traveling and we went to Greece and she tried to withdraw cash. There was a 50 euro limit withdraw per week. So imagine this, her account is in Germany. Germany has no restrictions, right? But once you are in Greece, for that time, Greece only allowed 50 euro withdrawal per week. So she couldn't withdraw more than 50 euros. And that's when she started to realize, oh, that's why you're into BTC. It's like, yeah, that's precisely why I'm in BTC. One time we went to South America, we were in a restaurant, and I was pretty much evangelizing, converting someone else into BTC. The waiter, I managed to convert my waiter on the restaurant into BTC. And I gave him a wallet, I gave him some BTC on his phone. He was really happy. And then after we finished our dinner, she went to pay for dinner with a card. And the transaction didn't go through because she didn't tell her bank that she was going to go to South America. So we couldn't pay for dinner. What happened is I gave BTC to the waiter and the waiter paid for a dinner. So that's how we managed to pay. And then she called the bank the next day, and a few hours later, the card was open again. So that's when people start to realize, wait a minute, I don't have the freedom to transact. And I think you and everyone have already experienced this where they're trying to make a transaction and they receive a phone call from the bank. And the bank is like, can you explain to me what is this transaction for? Who is it for? And I don't know about you, but I feel like, what am I, a 10-year-old? Like asking my dad if I can spend my money on this? Like, I think they strip adulthood from people. That's what the banks are doing today, in my view, though.
Yeah, it's often like the fraud department or something will block the transaction and then they'll ring you and then you need to spend maybe 30 minutes on the phone, as you said at the beginning of the video, almost justifying what you're doing with your money. I know it's the same. I've had quite a few people contact me in terms of normally off-ramping. If people decide that they want to off-ramp crypto back into the fiat traditional system, then the bank is then saying, right, where's this money coming from? Give me your address, your crypto address. Give me proof of this. And people are going, well, hold on. You're going from that financial sovereignty back into.
Yeah. And I also remember understood BTC, and I think you wanted to buy it, and you start to have problems yourself, like with your bank, like now I can't buy. I remember like there was this drastic change when you understood BTC, like, okay, I understood BTC, I want some. And then like, I think your banking was like, giving you some hard time to get into it.
Yeah, there's so many people. I mean, obviously I'm in the UK, and I've done many videos on the UK in terms of how it's operating in the crypto space in terms of regulation and stuff. But I think a lot of people have found it difficult, even to the extent of their traditional commercial bank will just block the transaction with no explanation.
Yes.
You'll try a different bank and it will work one week, and then the next week it won't work and they'll block it. It's been very difficult, but I think I'm doing a video at the moment. We're releasing loads of videos on the UK, but I think the FCA, which is the Financial Conduct Authority in the UK, for me, that's probably the new SEC. So, just in terms of how it's operating, but it'd be interesting to see because there's new regulations coming out next year.
Wow.
So we'll see how that works for the UK, but I know we're going a bit off a tangent. If we're talking about banks, I think it might be a miss not to talk about fractional reserve banking then.
Yeah.
Just off the top of my head. So in terms of, we can kind of lead it down a line to then bank runs and...
Yeah. So to me, it's very important to understand fractional reserve and where we are today, right? And where we came from. Most people don't realize this, but when you have, let's say, £1,000 and let's say, for instance, you did some work, right? You fix somebody's door, you fix somebody's sink, or you did somewhat of a work, or you are selling something on open on the market, and then you get, let's say, £1,000 of cash, right? What people don't realize is that paper money is issued by the Bank of England, the Central Bank of England. When you deposit that money into, let's say, a Barclays bank account, right? That money becomes part of the deposit of the commercial bank with the Bank of England. So whatever is issued by the central bank is either digital currency for the commercial banks that have accounts with them. And besides that, there's a small fraction of that, which is paper note and coins, right? Those are issued by the Bank of England. When you deposit that into, let's say, the Barclays Bank, that 1,000 becomes part of the deposit of Barclays with the Bank of England, right? And what Barclays does is give you a digital fake pound. And I know the term fake doesn't sound accurate, but you cannot take that £1,000 from Barclays and, let's say, deposit on Citibank or any other bank that you may have or Lloyds Bank in UK, right? You cannot take that £1,000 from any bank and transact to the other bank because they don't accept each other's money, right? Because there is an amount of monetary base which is issued by the federal or by the central bank, and there is all this M2, which is all this money fakely created by the commercial banks, and they don't accept each other's money, right? So whenever, for instance, let's say if you are making a bank transfer from Barclays to Lloyds Bank, what has to happen is Barclays have to go on their account with the Bank of England and transfer that £1,000 to Lloyds Bank. That is the money that is accepted for payment. And that's why banks go bankrupt. When people try to withdraw or transfer their money from one bank to another, some banks go bust because they don't have enough of the monetary base, which is created by the central bank. Every other form of money that we have, it is not accepted as a form of payment by financial institutions. The only money they accept is the monetary base issued by the central bank. And a lot of people don't realize that they have like 10,000 in the bank. They take loans for a mortgage house. When you take a loan to get, like, say, a mortgage on your house, the bank creates this fake money and they give that to you. And then you have to struggle and work to get monetary based money to give to the bank, right? I think most people don't realize that there's all, like, most of the money that we use are just fake money issued by commercial banks, and each one of them have their own currency and they don't accept each other's money. So
yeah, it's also, I think a lot the assumption from a lot of people is that you said 10,000 regardless of the country or whatever, really, US, UK, EU, but you put your 10,000 into your bank account, and then people assume that 10,000 is just protected in your bank account without realizing that you've given over custody of your funds to them. They will use your 10,000 in various different ways, like investing it and lending it and taking loans and all different kinds of things. It's not your money.
Yeah. And also they create 10 times that amount. Like today, the fractional reserve for most banks is 10% reserves, which means if you take cash, 10,000 and deposit on that bank can create up to 98,000, almost 100,000 fake pounds to somebody else, right? And then they ask those people to go and get those money. So only the cash, and another thing I can give an example here, which happens, especially in the Caribbean and some places in Europe where I have casinos. I have seen it. Someone goes to the casino and they won the roulette, right? And let's say you just earn 150,000 on the roulette or on the jackpot. There was a time where you could demand that in cash. And I've seen people with the receipt, all the paperwork from the casino, they have $150,000 cash, they deposit in the bank, and they never ever in their lives are going to see 5,000 again, cash. Like you deposit 150,000 today on cash into the bank, you never ever gonna see 5,000 again, because that money the bank doesn't want to give it to you. They want you to use their fake digital currency, and they would incentivize, some banks incentivize for you to transact within the bank, right? They give you like incentives where like if you transact with other people on this bank account, there's less fee, there's less this, there's less that. And the moment you start to transact with the other bank, they charge higher fees. And the reason why is because then they have to take their monetary base and transfer to the other bank.
Yeah, exactly. And they will make it very challenging. So if you wanted to withdraw 5,000 in cash, it comes back to that, what we talked about before. You're going to have to justify it again. You're probably going to have a meeting with the bank. You're probably going to have to fill in loads of forms. You're probably going to have to queue and be on the phone or whatever for a long period of time. But yeah, I know for example, I think it was in 2020 in the US, they removed the reserve requirement for banks.
It's zero.
Yeah.
It's zero. Today is zero.
Yeah.
It used to be 10%, 3%. Today is zero.
Yeah. So just to explain that means that the commercial banks in the US, the 10,000 that you're putting, let's say dollars because it's in the US, the $10,000 you're putting into the bank, 0% of that are they required to keep.
Yes.
Yeah.
Yes. So, and that's why we see the collapse of certain banks that we saw in a few years earlier, is because today the required reserves is literally zero, which means when people try to withdraw to other banks, the bank just goes bust because they don't have any reserves. So
yeah, but also there's as you mentioned, the central bank. There's a link between the commercial banks and the central bank, because the commercial banks are earning interest off of the central bank, like 5% or whatever it is.
Yeah.
And that's a huge amount of money that the banks are getting back in interest, whereas they are deposits from.
Yes, but the thing is, they can't give you that same interest. So the interest rate that they get, they cannot give you the same interest. And the reason being is because they give you their fake money. So there's a lot more of their fake money on your account, right? So they receive, let's say, for instance, let's say if they have a reserve of 10%, right? So on 10% of the reserves, they're receiving 5% interest from the central bank. But they can't give 5% to everyone that has deposits with them, because they create this amount of fake money that is not real. So if they have, let's say, 1 million in client deposits, but only 100,000 of reserve, they're receiving 5% on the monetary base reserve, but they can't give 5% to their fake money, because then the disparity is too huge. That's why whatever they receive from the Federal Reserve is one number, and what they're going to give to their clients is a much smaller number, because they don't have those deposits with the central bank or the Federal Reserve in the case of the US.
Yeah, definitely. And I know in the US in 2023, the reserve balances, so from the commercial banks to the central bank, it was $3.2 trillion that the commercial banks had with the Fed or the Federal Reserve. So the amount of interest they got would have been in the tens of billions.
Mm-hmm.
It's not like an insignificant number. And I read the other day that in the UK, I can't remember the exact banks. I know it was like NatWest, Barclays, I think it was Lloyds and Santander. They got more than £9 billion in interest from the Bank of England.
Yeah.
We're talking about.
Yeah, but the central bank can easily do that, because all they do is issue more money, right? Like whatever interest they offer, they can just pretty much issue the monetary, like inflate the monetary base. So
that links back to what I was talking about at the beginning of the video, which was inflation.
Yeah.
So
inflation is is what the best term for it is hidden taxation. And in Brazil, we call that hidden theft, right? And the best way that I explain this to someone is, this actually happened to me when I was a kid. I had my stepdad had an uncle, okay, and he was a barber. And this guy didn't like banks. He didn't understand banks. And he literally charged cash for, I mean, a barber is easy to charge cash because it's smaller amounts. And he used to keep that on shoe boxes, okay? And he would take those shoe boxes and he would hide that in his house. Everybody knew he had money, but he never had money for anyone. People asked him like, no, I don't have money. The life is difficult. He never bought new clothing. He had a very frugal life. In Brazil, when I was growing up, the currency changed 5 times. One day he got ill and he needed to be in treatment. He went to pay for the treatment with the money that he had on the shoebox. Guess what? That currency was no longer valid. Mm-hmm. So they just like changed the currency, and all the money that he had was taken from him so that was one thing. But the other thing is inflation, right? You keep your money. Let's say if everyone would take their money and keep like this guy did and never deposit that money on the bank, my question is, would the government or the authorities be able to charge taxes on that money? And people say, in most cases, no. And I will say, yes, all they have to do is inflate the currency. If they inflate the currency, so let's say, for instance, you have £1 million stored on your safe today, and you think you're going to be able to live a good life with that £1 million. As the Bank of England inflate the money supply, each year you can buy less with that 1 million. It's going to be at a point where that 1 million is worthless. And if you look, for instance, at the dollar has depreciated itself on the magnitude of 95%, right? So that's how they charge taxes by inflation. Inflation is just hidden taxes or hidden theft, because it takes away from your purchasing power without breaking into your house. By just creating more money, they diminish the purchasing power of the money you have. Therefore, they're stealing from you your purchasing power, and they don't even have to break into your home. They just have to inflate the money supply. So
I like that. I think we used the analogy, I think we did this before, we spoke about this previously. We used the analogy of bottles of water, I think it was, in a desert. So if you're in a desert and you have one bottle of water, that one bottle of water is worth a lot to you. If you had, I don't know, 100,000 bottles of water, you're probably not as careful. You're probably not as careful or value them as much. And it's the same idea, isn't it, essentially?
Yes. If you have one bottle of water, it's incredibly valuable. If you have like containers and containers of bottle of water in the desert, you're going to start to waste that water. And you see that here, right? In Europe, I see people taking a hose and washing their Porsche. Like if someone from the Sahara Desert sees you doing that, they're gonna like, what is this? And people wash their dogs with their water. Like, so can you imagine someone from the Sahara Desert seeing you like washing your dog with a hose, like, or washing your car with a hose open? Like, people are like, what? So
yeah, but then like linking it back to kind of financial sovereignty, it's eroding the purchasing power of the kind of the money you've earned, the money that you've stored, the money that you've invested in.
Yes, the problem is, as long as you see and you hold fiat, you can never have financial sovereignty. And that's another thing that people don't understand. Like, as long as you hold government money, you're never going to have financial sovereignty, because you have no saying of what happens to that money and how much they inflated. The only way for you to have financial sovereignty, and people understand this, like wealthy people, they know this. They buy assets, they buy gold, they buy different things. I'm going to give you an example to which happened in UK of financial education and financial sovereignty. But there's a guy in UK, he came from the Middle East, and he didn't qualify for like the bank's accounts and investment instruments. When he saw the helicopter money being given away to people during COVID, and all he had was British pounds, he was like, I need to do something. I need to find a way to preserve my purchasing power. And he didn't have much financial education, but he was in a house in a rural area where he had a lot of space. And what he did with his money, he just bought pallets of bricks. He literally just bought pallets of bricks. And we made a calculation on that 2 years of COVID, he outperformed Warren Buffett on his investments, on his returns. So that's one example of someone who understood financial sovereignty. He knew the money was going to be inflated and inflation was going to come, and he decided to preserve his purchasing power on bricks. So as long as you have, again, fiat money, you're never going to be sovereign. This man found a way, a very creative way to be financial sovereign, he just bought bricks and stored bricks, and then whenever he needs something, he just sold bricks. Like, so
It's not new, is it? I know, like, even I know it's a book you will have read, The Sovereign Individual.
yes,
I mean, that was in the 90s. I think it was 95, 97,
yes,
1997.
97.
Yeah,
Yeah,
97. James Davison and Rees Mogg. Is it
yes.
William Rees Mogg? They talked about that back then. So we're talking kind of 27 years ago.
Yes, they knew about it. There's a lot of things that happens in that book that makes you think those guys may be the creators of Bitcoin, right? Because everything that Bitcoin is, the world of cryptocurrencies, is pretty much described on that book. A financial instrument that would be, and I like the term that they use, extra national, not international, extra national. Like you are outside this idea of nationalities and countries. So I like it's just incredible how, and again, people don't understand this. The SWIFT system is just a WhatsApp. That's what it is. The SWIFT system is literally a messaging system between banks where each one have a number, and you know that beyond a doubt that message came from this person, right? The same way like today we use Telegram, we use WhatsApp, and I know who messaged me. That's what it is. And you pay huge fees to make money transfers. But what people don't understand is that there's no money leaving the UK going to the US when you make a transfer. It's literally a message that goes from UK to the US, and some numbers is added to a digital ledger. That's all there is. And if you see the enormous amount of fees and the enormous amount of fees on like exchange, like no money, no pounds are leaving the UK, going to the US, going to an exchange. None of that ever happens. It's simply a messaging system. And in some cases, it takes a week for the money to be credited. And what people understand is like WhatsApp is borderless. It doesn't matter which person you message in which country, WhatsApp is borderless. Now, Bitcoin and cryptocurrencies are borderless. In the same way a WhatsApp message can be sent, BTC can be sent, Satoshi can be sent, stable coins can be sent, like Ethereum can be sent, like cryptocurrencies knows no border. And I find fascinating that this so-called like risk technology or like criminal technology or whatever, they can do it. And the owners of the game, the sophisticated banking system, is still have not found a way to do this and make this cheaper for us.
Yeah, definitely. Such a rabbit hole, isn't it? We could keep going, like even talk about central banks and reverse repo and but yeah.
Oh yes.
Yeah, go down that level. Should we talk about tax? I know it's something that
yes, taxes, the T word.
I get a lot of comments on videos and completely understandably on tax because we're talking about crypto being quite big now, UK, US, wherever, with your kind of your IRSs or your HMRCs or whoever it might be looking to tax. If we take it from a financial sovereignty or freedom point of view.
Okay. So
I know we've talked about this before quite a bit, but
yeah, so taxes is there's something people need to understand. Taxes is theft, is immoral, no matter how you look at it, right? And the best way to explain taxes to people is this. Let's look at you, for instance, James. You're starting out your business, right? You start a YouTube channel, you're working extra hours, you take your time to do research, write a script, create videos, get your audience, attend clients, create content, pay editor. You put a lot of extra effort that you like instead of resting, spending time with your child, with your partner, you are putting this amount of effort to create a business, right? That's what you're doing and you are growing. Now imagine I come to you and I say, listen, James, whatever money you make on this, 20% is mine, right? You would not like that. You would not see that as something fair. Like, I mean, now what if you are doing this and I'm making your life more difficult? I'm creating obstacles between you and the creation of your business, right? And I still come to you and say, listen, no matter what, 20% of whatever you produce is mine, right? That's government and that's taxation. If you look at the amount of bureaucracy, the amount of work and loops that you have to jump through to start a business, legally speaking, and then after all that creation of obstacles, the government comes to you and say, listen, 20% is mine. The government is a business partner that you cannot choose not to have. They become a business partner to you. They only make your life harder and they decide how much is their cut, right? There's no way in which this is moral. Now, what happened is, and people are not aware of this, financially educated people, they don't pay taxes. They simply don't. They find ways to reduce their taxation. They start to give money to charity. They find things and they find ways in which not to pay taxes. Taxes in the end only hurt the financially uneducated, the worker, and let's say a lot of the middle class people. And you can say, even if you put taxes like, let's say we only want to tax companies that have over 100 million. Okay, perfect. Like Kamala Harris tried to do in the US. And you can say, oh, that tax doesn't hurt the poor people. It does. Let's give an example to you. Let's say Volkswagen have a factory in the US or Ford, and they're employing a lot of people. That's actually happening in Brazil. Ford has a lot of factories in Brazil, in South America. Taxation went up in a point where it hurts Ford. Guess what? Ford is leaving Brazil and South America. Now, all those people who had their jobs at Ford, they don't have that job anymore. And here's what happened. Ford does not even have to pay the benefits because they claim bankruptcy in Brazil. So taxation is by default theft. And there's a balance that the government needs to figure out. How much can I tax the business? How much can I tax the wealth before they move out? Tony Robbins, he left California to go to Florida because of taxation. Money does not take disrespect and mistreatment. And taxation will only ever hurt the poorest people. You can go at Monaco, a place that has very low taxation, and you're going to see how many millionaires are there. Money goes where money is respected and treated best. And taxation is a violation and a disrespect to money and is immoral.
Yeah, I think a lot of people look at also the unfairness being the taxation on the taxation on the taxation. So it's you're paying tax on your income. If we do it in a really broad level, because obviously this is a channel on crypto education, you earn money through whatever means, goods, services, whatever, income, but you get a salary, then you're paying income tax on that salary. Let's say you then want to invest some of that savings into crypto. Now they're looking at you're taking all of the risk, you're putting all of your money into crypto, you make your gains, and then they want to tax you on the money you've already been taxed on, again in crypto through your investment. And then you go through your life, and then obviously when you pass away, the government then want to tax you on through inheritance tax.
Yeah, I find incredible that in a Christian world, in a Christian country, they have the audacity to tax inheritance. That is the most anti-Christ deed that I ever saw in my life. Because the Bible talks about you and your responsibility towards your family. So you work your whole life, and then when you try to pass on something to your offspring, your legacy, they have to, if your legacy cannot pay taxes, that is something like, it's unbelievable to me that actually happens in a Christian world. And they don't see this as an anti-Christ thing. Now, another thing I want to say about taxation is, for instance, I only pay voluntary taxes, right? There's a very good reason why I am in Portugal, or I was registered in Portugal with my business. Portugal offers 0% taxation on the crypto business. So I was in Portugal for the longest time, legally paying 0%. There's a lot of countries, a lot of jurisdictions that you can use today and legally pay 0% taxes. And you're going to see more and more. I'm going to give an example to you in terms of taxation. There's a guy who is from the UK. His name is literally Guy, and he has a channel called Coin Bureau. He used to be in the UK. He's not in the UK anymore. Why he's not in the UK? Because UK make it difficult for him, and they try to charge taxes on his crypto. What did he do? He's in Dubai today. Why he's in Dubai? Why he's leaving the UK to go to, let's say, a monarchy, dictatorship, because that's what people see, or that's how the West see Dubai. Well, because there's less taxation there, and they're more crypto friendly. Money will always go where money is treated best. You cannot disrespect money and have a good experience in life.
Yeah, I read something ages ago. I think I posted about it as well. It's like a fine is a tax for doing something wrong. So you get fined for doing something wrong. So a fine is a tax for doing something wrong. A tax, though, is a fine for doing something well.
Yeah, you get penalized for doing well. Like if you manage to preserve your purchasing power, if you manage to be successful in business, you get penalized. And another thing people don't realize is a tax declaration is a violation of the Constitution, because you are producing evidence to be penalized. Like in the Constitution of most countries, it is illegal for me to force you to produce evidence against you. But that's what taxation is. You are obliged to create evidence against you so you can be penalized and sign on that evidence. And then once you handle that in, I decide the penalty that I'm going to be given to you. So it's just, to me, I just find incredible that people don't see the game that is being played in terms of taxation. And don't get me wrong, I believe if you use services, you need to pay. I am pro voluntary taxes. I pay taxes voluntarily. I decide how much I want to pay. Like in Portugal, I go to my accountant and say, I want to pay this much taxes, right? Because I use certain services and I believe if I use, I need to pay for it. But for the government to decide 30%, 40% of whatever you produce, I don't abide by that. As a sovereign individual, I'm fully aware of my obligations and I decide how much I want to pay. And I think voluntary taxes is the way to go. And people may say, wow, voluntary taxes don't work. Let me give an example to you. How about we create this great platform and we provide information to people, and instead of them having to buy massive amount of books, have gigantic encyclopedias in their homes, how about we create the best encyclopedia in the world and we provide that to people, and whenever we need money, we tell them we need money and they can pay voluntarily whatever they feel like paying. That idea sounds horrible. You say, no, we're going to provide a service and people are not going to pay for it. Guess what? That's Wikipedia. Wikipedia works with voluntary donations. Signal, which is the app we use to communicate. Whenever they need money, they say, listen, we need money. Can you donate to us? And they're live today by donation. We see the value on the service. I decide to donate. I didn't donate to them while they want bank transfers, but they already accept cryptocurrencies. I donate in crypto to Signal all the time because I'm happy with the service and I want to continue to see them serving me. I think that is the way we should go. If a government is confident that they can provide you good service, then taxation should be voluntarily. If you benefit from the service, you will pay. So
yeah, that was a really good one about you having to self-report. So it's self-assessment. So not only about the tax, but then the IRS or the HMRC or whatever, they'll expect you to work out how much tax you need to pay them yourself. So you often have to pay for accountants or services to work it out yourself first. Then they will assess whether you're right or not. And if you're not, if you're drastically wrong or whatever, they might fine you or, yeah, it's outrageous.
Did you see that there was a video on TikTok of this guy? He puts the IRS label and he changes glass or something. And then the other one, so it's like two guys talking. And the guy says something like, hey, you gotta pay your taxes. He say, no, I don't owe any taxes. Oh, yes, you do. You say, okay, how much do I owe? You say, that's for you to work it out. You say, if you know how much I owe you, why don't you just tell me how much and I pay you? You say, no, you got to do your numbers. You say, but you know how much I owe. You say, no, we don't know how much you owe, but we know that you owe. You say, okay, so if I run my numbers and I make a mistake, we will let you know I made a mistake. So if you know I made a mistake, you know how much I owe. No, we don't know how much you owe. So they have all this information. They can know you made a mistake. It's just incredible if you see this video though.
Bizarre, isn't it? It's bizarre.
Yeah.
So that ends this video and part 1 of 2. So do keep an eye out for the second part. And as always, I'd love to know what you think in the comments below about financial sovereignty and financial freedom and what this means to you in your life. Just a reminder that if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific crypto tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Miner, which is part of the company Nephos, that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description to this video. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage that's out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5 that I did a video on recently that you can find a link to here and in the description. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.